Have you ever wondered what would happen if you just stopped paying your credit card bill? Maybe you're curious about the consequences or thinking about what the worst-case scenario might be. So, let's start at the beginning. When you get a credit card, you are borrowing money from a bank or a company. Every month, they expect you to pay back what you spent plus a little extra called interest if you don't pay in full. But what if you just ignore the bill and never send in any payment? The first thing that happens is that your credit card company will charge you a late fee. This fee can be pretty high, usually around $25 to $35. That might not seem like a lot, but if you keep missing payments, those fees can add up quickly. Next, your interest rate might go up. Credit cards often have something called a penalty APR. This means that if you don't pay on time, the company can raise your interest rate to a much higher number. Suddenly, your debt grows faster because the interest charges get bigger every month. After a few months of no payment, your credit card company will likely report your missed payments to the credit bureaus. Your credit score will take a hit. This score is like a number that shows how trustworthy you are with money. A low credit score can make it harder to get loans, rent an apartment, or even get a job in some cases. If you continue not to pay, the company may send your account to a collection agency. This is a group of people who try to get the money you owe. They can call you, send letters, and try to convince you to pay up. This can be very stressful and might affect your daily life. Eventually, if the debt stays unpaid for a long time, the credit card company can take legal action. This means they can sue you to get the money back. If they win the case, a court might allow them to take part of your paycheck or even your bank account. This is called wage garnishment or bank levy. It can cause serious financial problems. One more thing you might worry about is whether not paying your credit card can lead to bankruptcy. The answer is yes, it can. If your debt becomes too large and you can't pay it, you might decide to file for bankruptcy. This is a legal process that helps you get a fresh start, but it also stays on your credit report for many years and can make borrowing money difficult. Now, some people think that if they just stop paying, the debt will go away after a while. That is not true. Debts usually stay on your credit report for 7 years. During this time, the credit card company can keep trying to collect the money and your credit score will remain low. You might also wonder if ignoring the debt means you won't have to pay it ever. The truth is that the debt doesn't disappear. The company can keep trying to collect it, and the interest and fees will keep growing. Plus, the stress and worrying from dealing with collectors can take a toll on your mental health.